Hello, everyone. This is your old buddy Romulus with Backpack Trader. Let's go to the movies. Apparently, not enough of you are going to the movies, at least not in your homes anymore. What about the movie theaters? I bet they're not doing too well either. Nope, they're not. Anyway, Netflix and chill, Netflix and lose your money. How about that? Stock is down 35% just today. Wow, highest volume ever on record for this company. The stock is now down almost 70%. Not 7. It's down almost 70%. You start talking 50, 60, 70%, pretty soon, that's real losses. Incredible. This could have been avoided, however. Let's go through it and see if we can learn something about better trading and investing with who? Your old buddy Romulus. Okay, we have to go back a little bit to make sure that we are getting the right read on Netflix. And as you can see, let's get rid of the indicator so we have more of a canvas to work with. Okay, the stock is trading in a range over here. That's called consolidation, everybody. Consolidation, or put it more simply, a trading range. It's coming up to an area where for some reason people are interested in selling. That creates pressure. The stock heads down, but it doesn't go down forever. It stops at a certain area where it has other times in the past. Then it goes up again, then it falls and it goes up. So this is called the trading range, everybody. Well, it breaks out of that trading range, as you can see, right about in here, August, and then definitively in September. Breaking price-wise above these highs from earlier that year. And I remember going on record as it was doing so, stating that the stock could hit about $700 a share. It went ahead and hit exactly $700 a share. When that happened, I also remember saying that it was going to be falling and it was time to get out. Different story, different day. But as it's moving from these $500 range, climbing out of the trading range, out of that consolidation period, it starts to go higher. It's got a trend line. You see that big purple line right there? Now, instead of falling to the same area on a horizontal basis, it's moving up a plane. It has an angle of ascent. It's falling to these areas and then bouncing, falling to them and bouncing, falling, and on it goes. But then something different happens. Whoops, it breaks below it, then breaks below that gold line, which, by the way, is an average of price over the previous 50 days. And look what happens as that's going on. Look on the bottom down here, the volume starts to get a little bit higher as it's breaking lower, okay? That's also a bearish signal and a sign. So the stock starts to go lower. So the first signal to sell that Netflix stock should have been the breaking of that trend line right there. If that didn't do it for you, if you still like to go to the movies in your house, what about the breaking of that 50-day moving average, which took place on November 30th? Watch, the stock had been trading firmly above it really since early August. That could have been another signal to sell that Netflix stock. Are there any more signals? Well, yes, there are. A breaking of another major moving average, which is the big red line, the 200-day moving average. That happens on January 5th. Also occurring on volume expansions. That could have been a signal to you to sell the stock. Well, really, that should have been it right there. Because not only did it break below the 200-day moving average at that point, but it broke below an area of that trading range, that resistance area, support area that had been holding it together for quite some time. Right around here, that's when you should have sold it here, many times. Well, what if you kept it? What if you just liked the company so much, became enamored with everything Reed Hastings does, and thought, there's no way the stock, it's a FANG after all. This is going to go up forever. It'll come back. I mean, you're crazy. It's coming back. Okay, well, how about this? Smash City. Stock drops 22% on January 21st after the earnings came out. A little bit of a rebound goes on right near previous support, which is new resistance. That should have been a signal as well. No? Now it's probably too late. The stock is down almost 70% from its all-time high of 5 months ago. Netflix will never again, that's right, never again, move the markets the way it used to. The company's still going to be viable. They will remain in business. They are not going bankrupt. None of those things are in the near-term threatening future. However, the stock is done. It is done. It could rebound quite possibly, quite powerfully even over coming days, weeks, or months. Closing this gap, probably never. Tesla's coming out. That's the reason we're talking about this. That's right, Tesla. The original electric car company has earnings today after the close, and I don't think that a Netflix smashing is in store for Tesla after the earnings come out, by no means, but it could get a little bit of a bumpy ride. You see the stock down 4%, kind of in anticipation, a little bit of fear after people watch Netflix get annihilated, a little bit of fear coming in here, thinking maybe the best days of Tesla are on another road behind it. And that's something I've been saying for quite some time. I don't believe Tesla gets back above the all-time high from early November for several years. That's right, several years. Even if the stock does well tomorrow after the earnings or the next couple of weeks, there's a lot of competition. And that's what's been the real driving factor behind the problems with Netflix, is there's so much competition out there. Disney offers a great service. Amazon offers a great service. Apple offers a great service, streaming service. And there's many other companies as well. NBC, Paramount, Discovery. A lot of companies offer very great, high-quality streaming services. Netflix is not the only movie to watch anymore. And Tesla, there are a lot of other companies today that offer electric cars. Ford's Mustang has been doing quite well. General Motors has the Hummer that's selling. They've got Cadillacs that are starting to move pretty soon. Go back to Ford. They have a pickup truck coming out fairly soon. Rivian, which is an electric car company founded in 2009. They have a pickup truck, and they have a delivery van that they're delivering to Amazon. But even with that, look how poorly the stock is doing. They came public just a few months ago, hit an all-time high of 180 almost, and $37? Wow, I hadn't looked at it in a long time. I didn't realize that things got that bad over there. Even Kia has a very nice electric vehicle. You can still buy those with the tax credits because they haven't sold enough vehicles in the U.S. to overcome that. Get this electric vehicle for under $35,000. You can't buy any Tesla for that kind of money. So there's a lot of competition coming. Again, anything can happen in the stock price tomorrow. It could go up, it could go down, but longer term, there's still trouble. And I believe when this bear market is over, because I believe we are in a bear market, Tesla's sitting at $350, $400 a share, or even lower. You doubt it? Again, look at Netflix. Netflix stock, if I told you 5 months ago when the stock was at an all-time high of 700, that it could drop 70% in 5 months, you said, Romulus, you're as crazy as the old Roman I thought you were, buddy. Get back to the forum. And here we are. I don't think Tesla drops 70% in the next 5 months, but next year or two, I think the stock can get cut in half or a little bit lower as we go. That's pretty significant damage. All right, what about the rest of the stock market? Procter & Gamble's on a tear after, I guess, good earnings. Margins are expanding as inflation kicks in, and we all have to buy